Continuing coverage tonight as U.S. auto sales dealerships across Metro Atlanta have abruptly closed their doors.
Right now, dealers across the United States are quietly drowning in unsold vehicles. From compact crossovers to six-figure electric sedans, inventory is backing up fast, triggering the steepest markdowns we've seen all year. Why are popular models suddenly failing? Which cars are being dumped the fastest? And how can you use this chaos to your advantage? Watch closely, because your next deal might already be waiting. Nissan Rogue, the numbers don't lie, one of the most visible compact crossovers in the country, is now struggling to find a buyer. There are over 100,000 unsold units of the 2024 Rogue collecting dust, with a 120-day supply just sitting on lots. That's not just high, it's a full-blown red flag in the world of auto retail. So what went wrong? While competitors like the Toyota RAV4 and Honda CR-V have aggressively shifted toward hybrid options, the Rogue stuck with a traditional turbocharged engine. With gas prices fluctuating and buyers increasingly favoring electrified choices, Nissan's lack of innovation is costing them. The compact sport utility vehicle market is also oversaturated, and the Rogue's aging design is no longer turning heads in a crowded field. The result? Dealers are now slashing prices. We're talking thousands off the manufacturer's suggested retail price, 0% financing offers, and even extended warranties in some regions. If you're shopping for a compact sport utility vehicle, this might be one of the best moments to jump in. What's more alarming is that Nissan isn't the only one with this problem. Another familiar name in the compact crossover space is dealing with an inventory problem of its own, and their misstep might surprise you. Hyundai Tucson. Despite bold redesigns and generous features, this once hot mid-size contender has failed to keep up with shifting buyer demands. The 2024 Tucson is sitting on a 90-day supply. Sales are down 10%, and dealers are now scrambling to offload excess inventory. Why isn't the Tucson flying off the lot? For one, it's lost its edge. While it still looks competitive on paper, its base engine doesn't deliver standout performance, and buyers are underwhelmed by higher trims that can creep past $40,000. Meanwhile, the Toyota RAV4 and Honda CR-V continue to attract customers with reliable hybrid options and stronger resale value. Hyundai tried to anticipate demand and ramped up production, expecting a surge in buyers. Instead, the market shifted, leaving them holding the bag. Though the Tucson does offer hybrid and plug-in hybrid models, those variants haven't driven the sales spike the brand expected. Many buyers are now cross-shopping entry-level luxury models that feel more premium for a similar price. So what's the play? Dealers are now stacking aggressive incentives, up to $2,500 in rebates on select models, along with low-interest financing offers. If you are looking to score a deal on a well-equipped crossover, the Tucson might be your under-the-radar option. Still, if you think that's a supply mess, just wait. The next vehicle has a supply problem so extreme, it makes the Tucson look like a bestseller by comparison. Jeep Compass. Compact crossovers are crowding the market, but one of them is in a crisis so severe it now symbolizes segment fatigue. There's a jaw-dropping 327-day supply of the Compass on dealer lots across the country. That's nearly an entire calendar year's worth of unsold compact sport utility vehicles. For a model wearing the Jeep badge, this kind of market rejection is a serious wake-up call. What happened? The Compass once filled the gap between the subcompact Renegade and the larger Cherokee. But since Jeep discontinued the Renegade, the Compass was supposed to pick up the slack. It hasn't. Its design hasn't changed much, and in a segment with constant refreshes and fierce competition, that's a fatal oversight. Buyers have moved on to newer, more tech-forward options, and they're not looking back. Even with Jeep's off-road reputation and rugged marketing, the Compass struggles to stand out. It lacks the edge that Jeep fans crave and the polish that crossover buyers expect. It's also priced close to vehicles that offer better value, more power, or hybrid drivetrains. Now dealers are doing everything they can to move these vehicles. Generous lease offers, low-interest financing, and in some markets, bonus cash stacked on top of existing deals. For budget-conscious shoppers, this is a window of opportunity. If the Compass continues to pile up, Jeep may be forced to rethink its entire compact strategy. Now, to be clear, the compact segment has some serious problems, and this is a reflection of that. But what's happening in the full-size truck world could send even bigger shockwaves through the industry. Look, we dug through dealer inventory data and factory reports so you don't have to. Now you know which models are drowning in supply and exactly when to strike for a deal. If that saved you time, hit subscribe and help us keep doing it. Ram 1500. One of America's most iconic trucks is suddenly finding itself stuck on dealership lots, despite once being a bestseller. Over 8,000 units of the 2024 Ram 1500 are unsold, and sales are down by 19% compared to the previous year. This isn't just a dip. It's a sign of something deeper breaking down in Ram's playbook. So, what's dragging this truck down? The market is shifting fast. Buyers who once prioritized raw power and chrome are now looking for hybrid systems, fuel efficiency, and cutting-edge tech. Ram's rivals, namely Ford and Toyota, have moved quickly. The F-150 and Tundra both offer hybrid variants that are pulling customers away from Ram's traditional gas lineup. On top of that, Ram flooded the market with inventory, confident demand would hold. It didn't. Higher interest rates and economic uncertainty made buyers more cautious, and now Ram dealers are left holding the bag. The good news? If you want a full-size truck, this could be your moment. Dealers are offering major cash back. Some reports show discounts approaching 5 figures and 0% financing in select regions. July could be the best month all year to grab a Ram at a steep discount. Ram's slip is loud and visible, but there's a quieter storm brewing with America's top-selling truck. This one isn't about demand. It's about something much riskier behind the scenes. Ford F-150. Production setbacks and shifting consumer trends are beginning to take a toll on a nameplate once thought immune. In the second quarter of 2024, Ford faced a 10% decline in sales across its F-Series lineup. That's not because people stopped wanting trucks, it's because Ford delayed tens of thousands of units due to internal quality control. Over 60,000 F-150s were held back for extra inspections. The company said it was to avoid recalls down the line, which sounds smart in theory, but in practice, it meant dealerships sat empty during peak truck buying season. Even loyal customers had to wait or walk. Compounding the issue is Ford's struggle to scale its hybrid and electric offerings. The F-150 Lightning saw a 77% surge in sales, but it still makes up only a fraction of total F-Series volume. Production has been cut to avoid excess, and Ford is adjusting prices downward to stay competitive with an uncertain electric vehicle market. Now, to move lingering 2024 models, dealers are going all in on aggressive pricing. Deep discounts, special financing terms, and generous trade-in bonuses are all being used to regain lost ground. It's a dealer's attempt to restart momentum before the 2025 models flood the pipeline. And while Ford tries to regain trust through damage control, another titan is pivoting behind the curtain, shifting strategy fast to protect its legacy nameplate. Chevrolet Silverado. Slipping sales, surging incentives, and new rivals are forcing one full-size pickup to fight harder than ever. Chevrolet is in defense mode. The Silverado, long considered one of the Big Three's most consistent performers, is feeling pressure. Sales of the light-duty Silverado dropped by 7.3% in the first quarter of 2024. That might not sound catastrophic, but in the high-stakes world of full-size pickups, it's enough to trigger red alerts. So what's happening? Like Ford and Ram, Chevrolet is facing a cost-conscious buyer base that's rethinking whether a full-size truck still makes financial sense. Interest rates are up. Fuel prices remain volatile. Buyers are shifting toward more practical, hybrid-ready options or downsizing entirely. To offset those losses, Chevrolet is pivoting hard. Their focus is now on heavy-duty models, which are still performing well with commercial buyers and large fleets. Meanwhile, the light-duty Silverado is being unloaded with urgency. Dealers across the country are cutting prices, sometimes below invoice, just to keep stock moving. There's another factor at play: competition from smaller pickups. Models like the Ford Maverick have seen explosive growth. They offer utility without the cost and bulk of a full-size rig. It's eating into the Silverado's customer base in real time. That's why Chevrolet is now loading the Silverado with incentives. Discounts, bonus cash, and interest rate buydowns are widespread. If you've been holding out on a light-duty truck, you might find your best chance right now. What's surprising is this shift isn't just happening with trucks. A once reliable family vehicle is now piling up at an alarming rate, and it's not a sport utility vehicle. It's a minivan. Chrysler Pacifica, one of the last remaining minivans on the market, is fighting not just for sales, but for relevance. In the United States alone, sales have dropped by a stunning 47%. More than 11,000 units of the 2024 model remain unsold, filling up dealer lots from coast to coast. It's not just a sales dip, it's a full-on inventory crisis. What's driving this collapse? It's not the vehicle itself. The Pacifica still offers seating for up to 8 class-leading cargo space and easy-access sliding doors. The real issue is perception. Minivans have become symbols of the past. Families now gravitate toward 3-row sport utility vehicles that feel more rugged, stylish, and socially acceptable in the school pickup line. Meanwhile, crossovers like the Kia Telluride and Hyundai Palisade are stealing attention and sales with equal or better tech, more aggressive styling, and competitive pricing. Chrysler, in contrast, hasn't introduced any significant reinvention for the Pacifica in recent memory. There's a silver lining for buyers. The Pacifica Hybrid is still one of the top-selling plug-in hybrids in the country. However, the standard gasoline trims are dragging the nameplate down, and that means dealers are ready to cut serious deals. Discounts on 2024 gas models are steep, often bundled with loyalty bonuses and financing specials. While minivans like the Pacifica are battling old stigmas, even mid-size sport utility vehicles aren't safe. One of the most trusted names in family transport is now showing real signs of strain. Honda Pilot, this mid-size utility vehicle, was built for dependability, but now it is struggling to stand out in a rapidly evolving segment. In the first half of 2024, Pilot sales dropped by 17.5%. That kind of decline might have been unthinkable just a few model years ago, but now it's part of a growing trend. Established family vehicles getting overlooked. So what's going wrong? Critics and owners have pointed to persistent issues with the 3.5-liter V6 engine. Some say it's underpowered, while others note that servicing can be a headache. Add to that a third row that feels cramped compared to rivals, and the Pilot starts looking like an aging option in a market full of fresh faces. Tech is another problem. Buyers expecting cutting-edge features are finding outdated infotainment, limited driver assist tools, and underwhelming screens. In contrast, competitors like the Toyota Highlander and Hyundai Palisade have made major leaps, offering more innovation, comfort, and interior flexibility for roughly the same price. Dealers know they're on the defensive. That's why they're cutting prices hard, especially on base and mid-tier trims. You'll see bonus cash, low financing rates, and extended warranty offers stacking up across many regions. If the Pilot can't regain momentum soon, Honda may be forced to fast-track major updates. Still, this trend isn't just hitting family vehicles. It's creeping into the luxury market as well. One of Germany's most prestigious brands is now sitting on mountains of unsold sedans. Let's look at what's happening there. BMW i7. When innovation meets hesitation, even a flagship electric sedan can become a liability. The BMW i7 was meant to be a technological masterpiece, a luxury electric sedan that would redefine the future of the brand. Instead, it's become one of the slowest moving vehicles in BMW's entire portfolio. In the past month, dealers have only managed to sell 125 units of this 6-figure electric flagship. Inventory is piling up fast, and the industry is starting to notice. Why the hesitation from buyers? For starters, the i7 starts north of $128,000. That's already a steep ask, but when you consider its estimated range, just over 300 miles, it begins to fall short against key competitors. The Mercedes-Benz EQS and Lucid Air both offer more range for less money, often with sleeker design language and interiors that feel even more futuristic. Another sticking point is styling. The i7's oversized kidney grille is polarizing at best. For traditional BMW loyalists, it's a departure from the refined aesthetic they once loved. For new buyers, it doesn't quite deliver the understated luxury they're expecting in that price bracket. Dealers are responding the only way they can, by slashing prices. Deep discounts, interest rate buydowns, and loyalty cash are now on the table just to move stock. In short, it's a rare opportunity to negotiate on a brand new BMW electric sedan. Now, this isn't the only electrified BMW that's causing headaches. One of their boldest performance models is now turning into one of their biggest liabilities. BMW XM. With its radical styling and supercar pricing, this controversial utility vehicle missed the mark, and now it's collecting dust. But the BMW XM was supposed to be a halo car, a hybrid performance sport utility vehicle, wearing the storied M badge with pride. Instead, it's turning into a branding nightmare. With a massive 544-day supply, the XM is sitting untouched on dealer lots. That's over a year and a half of unsold vehicles, and the numbers don't lie. So what went wrong? Let's start with the price. At $159,000, the XM dares to compete in supercar territory, but for most buyers, it doesn't feel like it belongs there. Its performance is solid, but not groundbreaking. Its styling, controversial, to say the least. BMW took big risks with sharp angles, exaggerated vents, and an overall design that critics say confuses aggression with identity. Then there's the badge. Hardcore BMW fans view the XM's use of the M designation as overreach. Traditionally, the M badge meant motorsport pedigree, lightweight, high-performance machines built for track and thrill. The XM, meanwhile, is a hybrid luxury tank. That disconnect has alienated both purists and casual buyers alike. To get these vehicles moving, dealers are slashing up to $10,000 off MSRP and offering rare incentives on a vehicle that was originally meant to be sold without compromise. The XM is now a cautionary tale. Bold moves without market alignment can backfire badly. And if you think oversized pricing is the only electric vehicle issue, just wait. The next car is smaller, cheaper, and still struggling worse than anything else on this list. Fiat 500e, one of the smallest electric vehicles on the market, is also one of the slowest moving, with buyers turning away in droves. Since its launch earlier this year, only 439 units have been sold. To make matters worse, there's now a 500-day supply of the vehicle languishing on lots. Why isn't it selling? Size matters, especially in the American market. The 500e's tiny footprint may work in Rome or Paris, but in the United States it feels more like a golf cart than a car. Safety concerns and cabin space limitations are big turnoffs, especially when buyers can get much larger electric crossovers at comparable prices. Then there's the price tag. Starting above $34,000 in many regions, the 500e simply asks too much for what it offers. Range anxiety is also real. The small battery can't compete with what Tesla, Hyundai, or even Chevrolet are putting on the road today. Fiat's shaky reliability reputation in North America only adds to the hesitation. Even with Stellantis pouring investment into future improvements, it might be too little, too late for the current generation. The good news? If you want a subcompact electric vehicle for urban use, you might be able to scoop one up for under $30,000. Dealers are cutting prices fast to clear inventory. While the Fiat 500e shows how size and pricing can backfire, some of the deepest cracks are forming in what used to be the backbone of the luxury market, mid-size sedans. BMW 5 Series. The luxury mid-size sedan market is shifting, and one of its former leaders is being left behind. Over 3,600 units of the 2024 model are sitting unsold on dealership lots, with a supply backlog stretching 387 days. So, what changed? For starters, BMW is losing ground to two key rivals, the Audi A6 and the Mercedes-Benz E-Class. Both have released sharper, tech-forward refreshes that are stealing attention and market share. Meanwhile, the 5 Series feels stuck between generations. It's still competent, but no longer class-leading. There's also been a troubling safety recall related to steering and braking systems, which has given some buyers second thoughts. When you're spending over $65,000, confidence in the basics is non-negotiable. In response, BMW dealers are moving fast to unload inventory. Heavy incentives have rolled out, especially on lower trims. Base models are now undercutting Audi and Mercedes equivalents on pricing alone. Interest rate promotions, lease cash, and loyalty bonuses are also stacking up. Prestige isn't a safety net anymore. As BMW struggles to hold ground, Jaguar's midsize contender is slipping even faster, and the numbers paint a bleak picture. Jaguar XF, graceful lines, British charm, and a leaping cat on the hood. This looks like a masterpiece, yet somehow none of that is helping it sell. Right now, 701 units of the Jaguar XF remain unsold, representing a massive 351-day supply. In the luxury sedan world, that's a full-blown crisis. Why aren't buyers biting? For one, Jaguar has a reputation problem. Reliability concerns have dogged the brand for years, and resale values have never been its strong suit. Combine that with a shrinking sedan market and increased competition from Germany, and the XF starts to look like a tough sell at nearly $60,000. Even with recent price cuts and dealer incentives, inventory isn't moving. That's because Jaguar hasn't given customers a reason to look twice. The interior tech lags behind the competition. The powertrains feel dated, and the upcoming shift toward electric models makes the current gas-powered lineup feel obsolete. Jaguar's parent company is pushing toward an all-electric future, but right now they're stuck trying to move yesterday's cars. Dealers are offering steep markdowns, sometimes slicing more than $10,000 off sticker. Still, for many buyers, it's not enough. But if you think Jaguar's in trouble, wait until you see what's happening with this next brand. Once seen as a bold Italian alternative to German monotony, it's now clinging to survival in the luxury space. And this time, the numbers are brutal. Alfa Romeo Giulia, they came back to the United States market with a roar, but now their sedan is going out with a whimper. More than 1,000 units of the 2024 Giulia remain unsold, and only 147 have moved off lots in the last 6 weeks. Dealers are sitting on a 323-day supply, and the longer this goes on, the harder it will be to justify the Giulia's place in the lineup. So what's dragging it down? First, depreciation. Alfa Romeo models lose value faster than most German rivals. Then there's reliability. Shoppers looking for long-term peace of mind often hesitate to trust a name that still feels more exotic than established. To make matters worse, parent company Stellantis recently pulled the high-performance Quadrifoglio trim from the North American market. That trim gave the Giulia an identity, a reason to stand out. Without it, the Giulia is just another luxury sedan in a segment that's already shrinking. Dealers are trying everything, offering creative financing, heavy discounts, and in some cases, sub-$40,000 pricing. If you're a bold buyer looking for something different, this could be your moment to pick up an Italian sports sedan on clearance. Now, these sedans aren't alone in facing collapse. Across the industry, certain models are unraveling, hit by recalls, internal competition, or failed launches. These next vehicles didn't make our list, but we need to mention them because they sit on the edge, and their fate could reveal where the market is truly heading. Volkswagen ID4 ... When electrical failures start making headlines, even loyal customers begin to walk, and that's exactly what dealerships are dealing with now. In the second quarter of 2024, sales of the ID4 plummeted by 58%. The problem wasn't just competition or pricing. It was a technical failure that sparked a major recall. Water buildup in the door panels caused critical electrical issues, including doors opening unexpectedly. That forced Volkswagen to halt both sales and production, while they scrambled to find a fix. Delays at the Chattanooga production plant didn't help either. Now, even as Volkswagen rolls out software updates and redesigns faulty parts, the damage is already done. Buyer confidence has taken a hit, and dealers are left holding a product many shoppers now view as a risk. Discounts are emerging, but trust will be much harder to rebuild. Dodge Hornet, an attempt to redefine a muscle brand with modern flair, has stumbled hard right out of the gate. They tried something new with the Hornet, a compact crossover meant to bring youthful energy and modern tech to a brand known for muscle cars. On paper, it sounded like a strong move. In reality, the Hornet stumbled out of the gate. From the start, reviews were mixed. Complaints about build quality, a lackluster interior, and pricing missteps began to pile up. The Hornet's hybrid powertrain was supposed to be a highlight, but it couldn't overcome the model's awkward branding and lack of category identity. Now, with inventory stacking up and showroom interest fading, Dodge is resorting to heavy markdowns. In some cases, dealers are listing Hornets for under $25,000 just to generate traffic. The Hornet's future is now uncertain, and Dodge will need a real reboot to save the nameplate from fading fast. Mitsubishi Mirage. It once offered basic mobility at a bargain, but now even steep discounts can't move the last few remaining units. The Mitsubishi Mirage is officially reaching the end of the road. Discontinued after the 2024 model year, it was once one of the last truly affordable new cars available in the United States. With a starting price under $18,000, it appealed to budget-conscious buyers who just needed basic transportation. But basic only gets you so far. The Mirage's outdated technology, sluggish performance, and limited safety features ultimately caught up with it. With the model now discontinued, dealers are working overtime to unload remaining stock. If you're hunting for a cheap new car and don't mind the bare essentials, this could be your last chance to buy one brand new at clearance level pricing. Now that is all for today's video, but which of these cars would you actually buy or avoid at all costs? Drop your take in the comments. Your insight helps others decide, and we read everyone. Thank you.